Welcome back to another episode of the Wyckoff Crypto Trading Lab market update. Today is February 8th and a very interesting development in the market. So let's jump right into this and have a look. All right, well, the most interesting news is obviously about the Bitcoin. And again, Elon Musk is producing a lot of news and he wants to be a whale. A big whale with $1.5 billion invested in Bitcoin. And how would we interpret this news? Well, first of all, this is a short-term event. So as we could see in the first case, and let me just expand this chart so that you would see all of the correct places where the announcements came. We're seeing that in both cases we have some kind of mean reversion into the news. How do we see that? While the volume signature increases, behind this volume spike, there is an obvious increase in the supply. So those are mean reversion traders that are trading against the news. And they are betting that the price will go down. It doesn't have to go down below the levels of the support. It doesn't have to create the new downtrend. That's not the purpose. What they're doing is just trying to collect some gains on the reaction. And we kind of seeing that it's happening again. Now, let's talk in general about, all of the announcements by Elon. What does it mean for us, for the long-term picture of Bitcoin and crypto market in general? We are definitely seeing a lot of institutional participation and interest in crypto market in general and in Bitcoin and some major coins and tokens and altcoins and so on and so forth. So we are not done with the secular bull market whatsoever in these assets. Bitcoin might be still in the trading range. We will have to see how tomorrow's day develops. But by no means should we be thinking that the whole move in Bitcoin was done. We are just, in my opinion, kind of creating more causality, and Alessia could talk about this on the PNF charts, to create more counts for higher prices. So there was a very interesting question, and I didn't answer this right away. I think it came from JJ. I don't remember the exact, nickname or the name. And the question was, well, how do you actually would trade, these spots on the intraday? And specifically, we've talked about this whole trading range right here. And we said that we are in the potential phase B, and we still have to have some kind of phase C test as a higher low. So that's still a possibility, even with those two announcements, and you could see how those announcements are having those big volume spikes. Even with these two announcements, and this is our channel here, we still, first of all, could have a little bit more potential to the upside. That's number one. Secondly, we could behave the same way as on the last announcement, meaning that we could come back into the trading range, and that would kind of extend that count, and this is exactly what we're looking for. So I would be a little bit cautious at this spot, and let's just kind of try to mimic what would we do trade in this particular area right here. And the question was actually about this bar right here and this bar right here. Could we be exiting at this point? Could we be scaling out? So let's talk tactics. First of all, our tactics will all be based on our analysis, and we would say, okay, well, maybe in phase B, we are going to have the rally to about 40,000, which is a very logical point of the resistance where the price might potentially reverse. With that type of mentality, we're going into this position. We're seeing a sign of strength that that brings the reaction back to the point to the resistance cluster. And we've talked about this area right here, how this particular rally and the reaction are confirming a stop in action of the backup, and now we could potentially go up. So let's imagine that our point of entry was right in this area, somewhere here. So what would we do here? Do these two bars constitute a change of behavior type of bars? And most definitely they do. So when you look at those two bars in a little bit closer look, what do we see? We see that supply is coming in, and like in these two cases, we're seeing that supply is somewhat at the elevated level. And then finally, the result of it is different than what we've seen before. So that in itself constitutes a change of behavior and suggests that we are in some kind of automatic reaction mode. And this also means that we're in the potential trading range. Well, where is this potential trading range? Well, here it is. And that's it. That's all she wrote. So we would need to figure out during this trading range that there is still a lot of strength that price shows, that there is not a lot of supply that's coming in and producing a meaningful reaction down. Like, let's say we've seen here this reaction, big reaction, that suggested a much larger trading range. Or this trading range is just a little bit more extended, and you could think about this way as well. So what would we do? How would we trade it? So let's say if we have entered somewhere here in this area, usually I would prefer to have, let's say, one full position, or you coming in chunks, you scaling in. So, and let's say that by the time you got to this place, you have, let's say, 4 units of whatever you trade. So on this particular bar, you might say, okay, well, I know that we're going to go into the trading range. So I'm going to scale out just 1 unit at this point, just because it's a change of behavior. I want to see the character of the trading range that might be unfolding. And as you see that the trading range is non-threatening, you hold on to those other 3 units, that's number one, and you might come back, scale back in around this area right here after the rally and the reaction showing more bullish behavior. Now, as we go into this bars right here, you might scale out again. And you might say, okay, well, now I'm again -1 unit for a total of +3 units. And then as the price goes back to the support area, and again, the price shows more bullish behavior like this, maybe on the breakout right here, you add 1 more unit. So, and you kind of have to trade through this area if you're seeing all of this type of changes of behaviors. But you should also recognize that first of all, they're smaller changes of behavior. So therefore, resolution of the trading ranges, like we see here, is going to be short duration of those trading ranges. Also, you have to contextualize where those changes of behavior come, and this is trading range and potential still phase B. So therefore, close to the resistance areas, this is where you will be scaling out some of the units, but not necessarily all. And obviously, you're waiting for the scenario where the price actually overcomes the resistance, like it did on the Elon's announcement, and you might be taking some profits here at around 46, 47. So that was a very interesting question, and hopefully we are addressing it. Okay, let's look at other instruments really quickly as we spend so much time on Bitcoin. So DeFi is still in the uptrend. There is really nothing that we can do here. If this bar fails, this will be a failed test, and that could produce potentially a little bit more to the downside. But we still have to see if this would happen. I would not be betting against crypto market just in general, just because the character of the trends, uptrends, are quite strong and sustainable. So therefore, just looking at how the volume signature increases, you would be thinking, yes, that's it, that's the end. But if it's gonna go higher, that would be a better thought here, just to follow the trend until an extremely clean change of behavior bar that would show both a substantial increase in the supply in selling and then a substantial price decrease. Before that, stay with the trend. Trend is your friend. Shitcoin, small caps, well, we just broke out and we just confirming this breakout. So everything looks bullish here. Polkadot, um, slightly less aggressive breakouts right now. So there is a little bit of the deterioration. But again, on the background of the overall supply decrease for this particular asset and overall bullishness in crypto world just in general, I would stay with the trend until a more meaningful change of behavior happens. The same for the Ethereum, which is was starting to outperform Bitcoin until this last bar. And again, if we're in this position, if we're swing traders, we are holding. If we're long-term investors, we are holding. If we're intraday traders, our bias is still to the upside. That's how bullish we are until something meaningful happens. Until we have, like in the link in chain link, deterioration, of the advance, and then we see that it starts to fail, let's say on the test like this, and we have a much more meaningful reaction to the downside, then we could start thinking, okay, what is this? What is this? Is this a part of the structure, of the larger structure? Is this the beginning of the decline, which I would, a meaningful decline, which I would doubt? So just stay with the trend and wait for a proper change of behavior. Aave, obviously related to DeFi and kind of has the same or almost the same type of structure. This bar right here is a little bit interesting in the sense of how much supply comes. So right now we are testing it. It has a little bit of the climactic characteristics, so we have to be on the lookout. Again, a lot of them are kind of hanging on this attempt to test, attempt to break out. So we'll just see, and I'm sure in the day we'll see some kind of resolution. ADA is in a very clearly defined upswing. What's nice about this upswing is that the volume signature comes and there is still demand from participants to be in this asset, and that's what advances the prices up. Well, with that, that's it for today, and I'll talk to you all guys tomorrow. Thank you.